But you can also trade using spot. You can also buy and sell Bitcoin, Ethereum using spot. Yes, you can. But the difference between using the derivatives market is that you can use leverage. You can have a multiplier in your trades, which this could give you the ability to earn more than spot with a smaller amount of money. But also in a way, it could also give you the ability to lose more, or you could also lose everything. Hey guys, so as someone who has been in traditional finance for over a decade now, I've seen different iterations of how you can earn via the stock market, where you could either trade or you could find areas where you could get dividends, or even if you enter the bond market, you can actually earn interest by lending your money to governments or different financial institutions. And what's interesting about crypto is that they've made a Web3 counterpart of what I have been experiencing in traditional finance. And in this video, I want to talk about additional ways on how you can earn from your crypto. And we're going to use OKX as an example for you on how you could actually find ways on how you can maximize and earn off your crypto. So if you want to know more about OKX and you want to either research or check out how you can open an account, do your own due diligence with them, links are down below in the description, and you can have additional perks as well by using the link down below. People always talk about crypto as a form for you to be able to trade. And that being said, if you look at it right here, if you use the trade function, you will have different scenarios on how you could actually trade. So first, if you trade markets, you have different options. Number one is spot, meaning when you trade the spot market, you're actually trading the actual coin. So meaning right here, the first line right here is you have Bitcoin and USDT, that if you swap your USDT with Bitcoin, you have actual ownership of BTC, depending on how much BTC you actually buy. Meaning also you can take it out of the exchange, put it into a hardware wallet and store and keep it there. That goes to different trading pairs that they have from Ethereum, OKB, OKT, LTC, DOT, Doge, Ethereum, ETHW, XRP, Luna, and so much more. They have over 300 plus coins that are available if you want to swap them. And I think that's a very, very good advantage to have a large list so that you have a lot that you could actually choose from. They also have the derivatives market, which you have perpetual, and also the futures market also, which will allow you to somehow add leverage to your position. And I think these are for people who just want to be traders, that they're not in it to own or hold the token, but they want to just flip it and trade it. But you can also trade using spot. You can also buy and sell Bitcoin, Ethereum using spot. Yes, you can. But the difference between using the derivatives market is that you can use leverage. You can have a multiplier in your trades, which this could give you the ability to earn more than spot with a smaller amount of money. But also in a way, it could also give you the ability to lose more, or you could also lose everything. So in spot, if you hold, you can wait it out until it comes back. But in derivatives, there's a chance that you can totally be wiped out, can be liquidated, and it could go to zero. So that's one of the pros and cons of it. And if you go through the derivative route that they have, you could actually short, meaning if the token or crypto is down, breaking down, fail to break the resistance, or in a downtrend, you could also profit from that via shorting. They also have options, and for those who are pretty much into options trading, this gives you the ability to be able to use your knowledge in options in the cryptocurrency route, where you could use calls and puts to be able also to earn in different directions of a particular trade. For those who are into options, you have the ability to be able to do puts and calls as well in just one platform. What's nice about OKX also is that you have a one-stop shop, that if you just want to own and hodl the token, you have spot, or if you want to trade the futures market, you can also do that. Or if you also want to do options, and if it works for you, you can enter that route as well. So if you're the type that you're a more active trader, I think these are things that will fit you. And please do note this though, the more active of a trader you are, the more risk you're adding to your trades. And of course, the riskier also, the bigger the chance for loss. However, on the flip side, if you do it right, the bigger the chance for gains as well. Now, I also want to address those that are passive, because please do note this, that the name of the game is to find something that will work for you, the name of the game is to find something that fits your lifestyle and fits your risk tolerance. The first part of what I've mentioned are for people who want to trade. Now, these are for people also who just want to get passive returns. So I click the earn function here, and as you can see, what's very, very compelling right off the bat is their USDT has an APY of 10%, which if you're comparing it already to banks, please do note this USDT is a stable coin. It doesn't fluctuate up or down. It tries to be pegged to the dollar 1:1. So meaning, if you're comparing it to time deposits or if you're comparing it to savings accounts, some savings accounts are 0.1%. This one is getting you 10%, which is massively more already. You have a 5% APY for Bitcoin. You have a 6.8% APY also for Ethereum, which is very, very good. And if I try to scroll down even further, they have other features where BTC under their smart gain function can give you 29.75%. ETH can give you 28.42% as well. Then they also have dual investment, which is essentially buy the dip, sell the rip, and you also get interest. This is not already fixed, similar to the ones that are above. If you look at it right here, you have BTC and USDT. It could swing to 0.24% on the lower side, and it could go 104.52% on the higher side APY. That's if you're selling BTC. Or on the flip side also, if you're buying BTC, it could be 2.3% to a high of 127.51% by the time of this reward. So please do note this, the higher the swings, every time you go to something that's not guaranteed also, you take on more risk and you also have the chance to actually lose. Unlike the ones that are fixed, also, you can expect a certain amount of yield on a regular basis. For savings, as what I've mentioned, those are the low risk products. So you see it right here, they're mostly stable coins, USDT 10%, USDC 10%, then you have BTC 5%, ETH 5%. This one, you'll have more altcoins that you can choose from, also the ones that are not stable coins also. The risky part of staking in altcoins is that you get a higher APY, but on the flip side of it also is that if the altcoin that you're positioning in drops in value, so say example, you earn 12% APY, that's for a year, but the token that you have over the year also drops by say 50%. The 12% APY that you have is not actually a lot versus the 50% drop that you could possibly get also. So right here you have SHIB, ApeCoin at 10%, SAND 8.5%, LTC 5%, ETC somewhere around 5% also. They have ETH 2.0. As you all know, ETH transitioned from proof of work to proof of stake. The return that you would get from ETH 2.0 is around 4.15%. Next is DeFi. This is you attaching your tokens or your coins to different DeFi protocols. And also, please do note, every time it's DeFi, it's not anymore as fixed as the earlier ones that I've mentioned. So you have lending pools. This is basically you lending your token. You have compound, where you could earn somewhere around 0.83% to as high as 4.91%, or Aave, which you could get around 2.52% to 14.03%. Then for DEXs or other decentralized exchanges, you have Sushi Swap that could give you a 0.65% return to as high as 6.8%. Then other staking mechanisms also that are DeFi related platforms, Sushi Bar, it gives you 8%. OpenDAO gives you 61.66%. So please do note, rule of thumb, higher rate of return, higher risk attached to it, so please do take the time to study. This is the list of stable coins, but very, very easy to see. Go to the more stable ones, USDT, USDC. What's interesting is that the APY is fairly attractive at 10%. Of course, all of this might be new to all of you. Check out the links below for you to be able to find out more in this. If you want to sign up, check out the perks that you can also get and the discounts that you can get by signing up using the OKX link down below. This is also another function if you want to loan out, and people loan out because they are more bullish on a certain coin, but they don't want to sell their current coin, so they would loan out the coins that they have, and then they would get a certain coin and they would see and maximize that as well. So I think that works for some. Please do note, every time you loan, every time you borrow, you attach yourself to a certain kind of risk as well. And this is something that's interesting. This is Jumpstart. It's a Launchpad mechanism that allows you to be early on certain crypto projects, and I've been mentioning this over and over. It's interesting if you're early on a project that matters in crypto because you get to come in cheap. And as you get to come in cheap in terms of the upside, if it's really, really done well over the long term, it may give you also the ability to have a greater amount of gain versus the ones that are coming in a bit later when it's more established also. So every time you come in at the start, you come in when it's new, not a lot of people understand it yet, there's a larger amount of risk, but it gives you a larger amount of gain. Also, when you come in later on, or when it's more established, of course, your yield becomes smaller, but you take on lesser risk. They've had over 1 million followers already. They've had over 12 projects already using this Jumpstart platform. So this is something that I'm gonna look out also, see how it fits me, especially the projects that are in it as well. A couple of things that may be interesting also for you guys is that they have a mystery box where you could get a certain amount of crypto. They also have an NFT exchange, which is interesting, especially for those who are creators that want to sell their work, are very artistic, or have something that's very interesting with utility that they can sell. And I guess the advantage of NFT marketplaces is that since OKX already has a very, very large pool of people that are in them, the attention that it has, I think that's one of your biggest advantages, that you don't have to promote and market it on your own, versus you're using the user base and you have a ready set of people already that can look and see your project. So if you're a budding artist, you're a musician, you're an entertainer, or you have an idea that could be an NFT, I think it's something that's worth looking at as well. So there, I mentioned different facets on how you could actually earn via crypto, and in this video we're talking about it, how you could do it via OKX. So you could trade spot, you could do derivatives, or you could also do passive returns via their grow function, or you could also get some bits and pieces via their mystery box, or via NFTs. Details are down below on how you can know more about OKX. If you want to learn more on how you could open an account with them and try getting into this entire fascinating world of crypto, links are down below on how you could register as well. I hope you got a lot from this. I hope that this was something that was very, very insightful also for all of you. This is Marvin Gurmo. I hope you enjoyed this entire series, doing a deep dive on OKX. And I hope that this is something that helped you trade well, trade strong, trade smart. See you all again soon. God bless you all.